In your mind, where does enterprise chat fit in the sort of value curve?
In the world of trading and pre-trade and post-trade and all the different parts of the trading life cycle, there's lots of different chats that have been created over the years. So obviously there's Bloomberg chat, there's the likes of Symphony, Ice chat, there's LSEG Messenger, and then there's other chats which have not been designed to be used in the market. So you also have things like WhatsApp, Telegram, Signal.
The agentification of workflow, how that happens.
So having an agent then you can use to query basically that rich data set means that you may have a broker that never forgets.
In terms of looking at the future of this, do you think there's going to be a whole bunch of regulation?
Gen AI is more the focus of regulators and really anyone in the world to have some level of explainability in there so that you can go back and understand why did it make this decision. Hi, this is Matthew Chung, CEO of iPushPull. Coming up, you'll hear Steve Grobe of Vision 57 and I talk about how realizing the strategic value in chat will drive success for those companies that embrace it. But why should you care about this? Well, chat use is exploding, the volume of messages sent is rapidly increasing, use of bots is significant and will only expand with the dawn of AI agents, and all of this coming in the backdrop of Gen AI becoming cheaper and more accessible. Well, there's a risk of doing nothing as a firm because there's currently lots of lost information that's flying around in chat, which means it's difficult to monetize that data, it's difficult to automate, and there's potentially new risks and fines from AI agents as they start to take place in the financial markets, which could be in the trillions. We'll talk about how does this impact your firm. So there's new revenue opportunities through better information and analytics. There's creation of new data sets from unstructured data. There's the ability to scale up OTC trading and broking workflows through chat-driven automation. And importantly, all of the controls and guardrails around bots and agents that you need to have in place.
Hi, this is Steve Grobe, founder of Vision 57. Today we're going to be talking about something that has been coming up in my news feeds more and more recently, which is this world of sort of enterprise chat, which seems to be on a collision course with AI. And there's been a bunch of recent announcements from Symphony and Bloomberg, which are, opening themselves up to third-party bots and agents and federated chat and all this sort of stuff. But it's a very new area. So to help me kind of unpack what the potential of these changes are, I'm very pleased to have Matt Chung, who's CEO of iPushPull. So welcome, Matt. Just before we sort of get stuck into this, could you just give me a minute on iPushPull and where you fit into the whole space?
Yeah, sure. Thanks for having me, Steve. So yeah, iPushPull, we're an enterprise SaaS platform. We're built to transform and capture chat and message data and turn those into strategic assets. We help lots of regulated industries like financial markets, but also commodity markets, crypto, to unlock information, automate workflows, and put lots of controls on data, humans, bots, and agents.
Okay, great. So sounds like I'm talking to the right person then.
I hope so.
So before we get into the AI side of it, let's just focus on chat. And as we all know it and use it with our friends, our family and everything, but enterprise chat is a slightly different thing. So in your mind, where does enterprise chat fit in the sort of value curve of our industry?
There's lots of different flavors, I suppose, of enterprise chat. So there's chat platforms that everyone would be familiar with, like Microsoft Teams, maybe Slack to a certain extent, and other platforms that are built more broadly for enterprises. So not just in the markets, but in the world of trading and pre-trade and post-trade and all the different parts of the trading life cycle, there's lots of different chats that have been created over the years to cater for people in kind of those markets environments. So obviously there's Bloomberg chat that is ubiquitous across trading and sales and front office. There's the likes of Symphony, which is probably sitting a bit more broader in terms of kind of pre and post trade and middle office and so on. But there's also other chats like Ice Chat. There's LSEG Messenger. And then there's other chats which have not been designed to be used in the markets, but because people, if you're a salesperson or a broker and you're looking to service your client, you kind of go where your client is. So you also have things like WhatsApp, Telegram, Signal, and a variety of chats. So you could have a proliferation of different chats across a particular company, and then different business areas and asset classes then seem to gravitate towards different ones.
All these headlines of huge fines going to banks for use of WhatsApp and blah, blah, blah. So there is definitely a sort of control angle to all of this. How do you try and address that?
I guess there's a few parts to that. One is around record keeping. And a lot of the big fines that you've seen has been billions from the SEC is around using non-compliant platforms, i.e. you're not storing and archiving all this information. And where it starts to get a bit messy with some of those particular platforms is particularly with WhatsApp is a problematic one because you've got chats on there, you can add in disappearing messages, I can do calls on there as well.
Right.
And the way WhatsApp is created is actually quite cumbersome technically to be able to capture all that information because WhatsApp was never designed to be an enterprise chat.
Yeah.
That's the reason why it's a problem.
So, let's talk then a bit more about Symphony and Bloomberg. So Symphony announced this sort of federated chat idea recently. What is it that Symphony is, in your opinion, doing right?
The federated chat's not new; it's been around for a few years.
Okay,
but federated chat is essentially building bridges between different chat platforms in order for someone like Symphony being the conduit for building those bridges. Symphony, you can do the record keeping and store chats and so on, like you can with a lot of the other enterprise chats as well. But the federation piece kind of comes in where you then build a bridge between Symphony and WhatsApp or Symphony and WeChat and so on. Okay. And those two in particular are the ones which are the most troublesome, like I said, because they were never designed to be a full enterprise chat. So WeChat is obviously used a lot in China, and WhatsApp's used a lot kind of everywhere, really, around the world. Less so in the big institutions, but when you go into commodities markets, for example, it's used quite heavily. So someone like Symphony then provides the means then to do all of the capture for record keeping, for surveillance and so on. So there's other solutions out there as well that provide similar tools, but Symphony I think is in a good spot because it's got 20 or so banks that are shareholders in the company. So it makes it a tool they need to be used.
Let's move on a bit now and talk about this word I struggle to pronounce, the agentification of workflow and chatbots, and what are you seeing in terms of how that happens and works, and what are the sort of key three principles that you apply when you're thinking about this?
Well, I think before jumping into agentic workflows, it's probably better to break down what the world of bots and chatbots and agents actually looks like and what that kind of ecosystem looks like. Because today, if you're talking about chatbots, people immediately think of ChatGPT and Gemini and Claude and all these other large language model powered chatbots. So the kind of the description of it has changed. So sometimes you may need a large language model to be able to help interpret some of the information, which means that you can then talk in more of a natural language. And what's been quite interesting, I think, the nomenclature or the terminology or the syntax or the way people talk about things in the markets. What we've actually seen with a lot of our customers is that irrespective of particularly in pre-trade, in price discovery and so on, when someone's asking for a price, you don't type it out in long form. You type it out, want to buy 10 million of this. Well, you just put something in the very shortest number of keystrokes. You don't talk in this verbose natural language way when it comes to trading, and even when it comes to post trade as well, because you would have too much stuff going on in the chat, and it's too much information that's not necessary. So what we've seen is that, particularly in pre-trade, every single market has conformed on its own syntax, but there's no overarching syntax that works for every market. Not yet. That's I'm sure that will be here very soon with what you can do with large language models and so on. But what you find is if someone is trading Euro swaps, the way they might speak about buying and selling things due to the nature of the instruments might be different to someone doing Euro dollar FX or Euro dollar short interest rate futures, right? So the syntax is all slightly different depending on what asset class you're trading, what instrument you're trading, what region in the world you're trading, and then obviously there's bits about language because people in Japan will be typing in Japanese rather than English. So there's these different language and description of trades and so on that's happened, but because everything has a fairly defined syntax for each different instrument and asset class, it's meant that you don't actually need large language models to be doing some of the mapping and parsing, because there's more simpler, more efficient, and more cheaper techniques like regexes and parsing, for example.
Right.
And it's essentially saying, okay, well, these things mean buy this, and these things mean sell those, and let's match them up. And you can have kind of simple mapping and through to more complicated levels of parsing. The agentic piece, going back to your question, where that comes into it is, because I suppose there's two sides to that. One is agents, and kind of one's agentic workflow, and they mean slightly different things. And then the idea of, I think when people are thinking about agents at the moment, you're thinking about autonomous AI agents. Which
an agent is a smart bot.
Yes, yeah. So you've got a very smart bot, and then there's a kind of an completely autonomous kind of agent that can go and do things, which no one is using those in the world of financial markets and so on at the moment. But where you're starting to see some use of agentic workflows is where, so for example, we have a customer who is using an agent inside a digital whiteboard that they've used iPushPull for, and that agent can sit inside that whiteboard, which is it's got prices and trades and orders and fills and so on, and it's got within that whiteboard there's a history of data and going way back of different prices and exactly. So having an agent then that then you can use to query basically that rich data set means that you may have a broker that never forgets and never sleeps. Which maybe on a Friday morning might not be the case sometimes.
In terms of looking at the future of this, do you think there's going to be a whole bunch of regulation that comes into our market about how all this stuff should and shouldn't work? Is it too early yet? And do you think that firms? There's sort of three questions here. Do you think that firms really ought to be, if they're not looking at this now, then it really ought to be on their agenda?
Good question. I think talking to like the FCA and understanding how they're looking at there's Gen AI, which is at the root of all of this, but then the evolution of that is these kind of agentic workflows, autonomous agents, and so on. Now, I suppose there's two parts to that where you can, like anyone, it's always good to look back in history to try and predict the future and see how people are going to react to things. But there's probably two areas you can look at where you've seen some sort of automation in some shape or form, and then some regulation come in to put some guardrails around it. I think one is around algo trading and black boxes and so on, and we've seen that for what?
And you've seen some algos blow up companies.
Yep. Yeah. And then there's rules around, okay, what's in the black box, what can it do, what can't it do, how's it explainable, and so on. Then the other big comparable to look at is what's happened with Excel, Microsoft Excel on spreadsheets, or to use the regulators' terms, kind of EUCs, end user computing, which is basically the ability for someone to, to build something themselves in a spreadsheet. So over the last, 2 decades or so, you've had more than $10 billion of fines and losses. JP Morgan had the whale, like what was that, 10, 15 years ago? That was $6 billion. You've had Citigroup's been fined quite a few times for some of the lack of governance on EUCs and so on. So what happened in those kind of scenarios? So then some regulation has come in to control that, to put some guardrails, to make sure people are doing things in a safer way. Things like BCBS 239 was a regulation that came out to look at Excel. Now going forward,
what's the future look like?
Yeah, if you're looking at AI, there's regulators themselves are still trying to figure out, I think, what they're doing with it. The only one where you've seen something kind of really go forward is probably something like the EU AI Act, but that was not really designed for some of the things we're looking at in financial markets and specifically trading. But what is useful to start thinking about is, if you look on the horizon, because at the moment, Gen AI is more the focus of regulators and really anyone in the world, to have some level of explainability in there so that you can go back and, understand why did it make this decision. As you go forward and you start to see an adoption of some of these AI agents that we were talking about earlier, means that at that point in time, unless you have some guardrails and controls around an agent, because the whole idea of the word autonomous means the agent can make a decision for itself. Yeah. So, for example, the workflow that we're working with a customer on is having an agent, and essentially an agent then can connect to different tools. So, for example, no large language model knows what day it is or what year it is. They don't have this idea of time and date. So you give it a tool to understand that. Another tool might be, connecting to the iPush-Pull API. Another tool might be, a whole bunch of other stuff. So the autonomy comes because the agent itself then chooses which tool is best fit to serve its purpose, right? But then how that agent would work in the environments of iPush-Pull is anything it does, it's not connected essentially to the outside world. Any connectivity to the outside world is through our platform, which then we provide all the controls and guardrails and access controls, permissioning, identity management, and so on. But then if you go forward, if you then have, let's keep it simplistic. If you have an autonomous agent that's able to, you might be able to try and find out what the date and time is. It might be hooked up into a financial markets news feed, and it might be hooked up onto, let's say, an MT4 retail trading platform, right? Mm-hmm. Let's keep it there for the moment on kind of the retail side. If you imagine, though, that wasn't the retail side and that was hooked into, a major financial institution or a big hedge fund, and that agent can go and put a trade on itself without asking anyone, and it's got the authority itself to put on any size that it wants because it's completely autonomous, then all of a sudden the $10 billion losses you saw with spreadsheets in the last 2 decades could be a rounding error for an agent. And then so it's this idea of having these autonomous agents that can be trading with one another with no controls and guardrails around it, means that you could bring down the entire global financial system. So I think where we are today is that is on the horizon. It's not something people are worried about right now today, because no one is adopting these tools just yet in financial institutions in the enterprise. But what we would kind of say to people is you need to start putting the controls and guardrails in like now, so that anything that you are building, anyone across, if you've got 10,000, people in your firm and they're developers and BAs and people that can, know how to create things, those people need to be funneled through one unified way or one central place.
So what you're saying is there's a big internal governance issue that at a at a firm-wide level, people should set these guardrails and controls as to how this stuff can get implemented.
Yeah, exactly. And I think that's where it seems to be at the moment. Firms are adopting processes that work for like data governance and risk governance. So there's lots of governance in big financial institutions. That's why generally they're quite slow compared to little startups, right? But all of those protections and processes have been there for a very long time when it comes to data and access and things like that. So I think what we're seeing is people are adopting what they already know and using kind of common sense approach to it until the regulator then decides, okay, this is the way we want it to be. And I don't think we're there yet in terms of the regulators are still figuring stuff out for themselves. But I think it probably wouldn't be a million miles away.
I'm sort of caught between awe of the potential for all of this stuff and a little bit of scaredness about what happens if it goes unchecked. But it's here to stay, and I think it's very obvious that firms need to be thinking about this and have a strategy around this. And I think you recently published, or maybe it was a while back now, a document, a white paper on what is your chat strategy, which people can get from your website, I would imagine. But that's about all we've got time for today. So I'm going to say thank you, Matt, very much for that. That was great. And we'll see you all next time. Thanks. Bye.
Thank you, Steve. So what are your next steps here? Well, I think it's important for you to understand how chat is used across your organization. What chat applications are you using? Are you already capturing this data? If you're using bots or agents, have you got sufficient guardrails in place? So do reach out to iPushPull and we can advise you on how to build your plan to capture, transform, automate and monetize your chat data. And in the meantime, please download our What is Your Chat Strategy report.